So guys, I hope you had a good trading session, and if you did not, then I guess this diagram right here will explain why not, right? So we had another one of those wild moves today. We had a market which was bullish in the morning, then gave up all the gains, and then again had a rally in the second half, which again got sold into towards the end of the session. So it was a very volatile day, and even in percentage terms, I believe this is all 1% kind of a move, right? So I think Bank Nifty was relatively weaker, so I don't think the moves were as sharp as they were in Nifty, but nevertheless they were big enough to hit the stop loss, right? So on days like this, of course, making money becomes harder for an option seller. For an option buyer, of course, if you are looking for a directional trade, there are plenty of opportunities. I mean, a simple indicator like any trend chasing indicator will give you a signal to make money. So for option buyers or for directional traders, it was a good day. For option sellers or for non-directional traders, it was a challenging day. Now, whether or not you ended up in profit, that's a different story, but challenge was there. So what is becoming apparent is that making money on expiry days is not as straightforward or as easy as it used to be. So market is making us work for it, right? So nothing is going to be easy. That is what the market is telling us. And we have seen this hundreds of times when we have these multi-leg moves, right? So you see, during this move, if you have any call options, they get in trouble. During this time, of course, all the put options get in trouble. And then again the call options get in trouble, and then again the put options get in trouble. So when exactly you sold those options and how far from at the money or out of money did you sell, all those become very important factors in whether or not you will end up making profit on such days. Now for me, it was a profitable day, and as you guys can see, this is how my profit was, my P&L was fluctuating, and it was a good day to start with. It was not like the previous days where the previous expiries where I had to sit on a loss for a very long time and then it turned around in the second half. This was a very straightforward kind of a day for me. It started becoming profitable right away because I was selling call options, of course. Put options were giving trouble, but not that much that they would eat into the profits, overall profits. But when the market turned from 1 o'clock, then I had to adjust myself. I had to get out of my call option positions, so in order to make sure that the day ends up in profit, and then that worked out fine. So guys, the big picture is that today was a day which was driven by a very important event pertaining to the Federal Reserve, the interest rate hike, which caused the US market to fall down substantially, but that did not have the same kind of corresponding impact on our own market, right? So we basically ended up flat. So it tells us that Indian market is relatively stronger as compared to the global peers. Now, how long will this outperformance last? That's something to be seen. But at least as of now, I would say that 17,500 or thereabouts, that seems like a good level for initiating long positions. Of course, if there is a big gap down and the level breaks, then more downside opens up. But until that happens, I will have a long side bias. I will start looking for long trades in this zone, and that is pretty much even what happened today. Today the market rallied from 17,500 thereabouts, right? So that's basically it, guys. A tough expiry day, but still a profitable expiry day, so I'm thankful for that. So I hope you guys also made some money, and with that I will wrap up the video, and I will see you guys next time.